Joining us now for more, Jessica Ehrlich from Bank of America Securities. Jessica, thanks for joining us. Great to see you. Which of these two parts that we just mentioned are you more excited about for the stock in the short term? 100 million subscribers or reopening of the parks?
The reopening of the parks. I mean, everybody knows that Disney's direct-to-consumer platform has been a massive success. But the question or the uncertainty is in the theme parks and the reopening of the rest of their businesses. This is a huge move. California's opening well before we expected. We did a report a few weeks ago outlining the reopening, and we just did not expect California to open this soon. So it's just a very positive sign.
That said, clearly the stock has been on a tear. Has most of the stock performance been because of the direct-to-consumer platform, and does it justify the share price performance?
Yes, I think it is because of the direct-to-consumer platform. Disney has executed flawlessly, better than flawless. It's really been perfect, and the sub numbers have surprised. And this is clearly a global platform that will be a growth engine for the company for a very long time. So they're transitioning in a very successful way. But theme parks are 50% of their operating income, and it's really important. They've been closed or partially open all over the world. So having the reopening where they're losing money in California, they're partially open in China and Florida, it's a really big deal. I mean, our base case for Disney and our $223 price objective, our base case values the theme parks at $75 per share. In our bull case, which seems very possible, it's $100 per share. And it could be much better than that if things really get back to normal in 2022. As opposed to 2023.
This is also a company that has laid off, Jessica, thousands of people during the pandemic, at least 30,000 related to some of those theme park closings. Are they going to hire them all back or not everyone?
Well, I think for Disney and the same for Comcast, your parent company, Universal, this was a very unusual time. Theme parks have never been closed. I mean, maybe for half a day because of weather, but never for this extensive period of time. So both companies have used this time to really restructure the business, think about the technology, improve the customer experience, do things more efficiently, focus on yield management. And so I think we'll see a better product, a more efficient operation, higher margins coming out of this.
What is your take on Comcast, CNBC's parent company? I saw you've upped your price target, one of the highest on the street.
We raised our price target, but we did this baseball bear case on theme parks and the reopening. We did raise our price objective for Comcast. We already had raised it for Disney. These are two companies that will be huge beneficiaries of a reopening. And the reopening is happening faster than our estimates, very significantly. We did not expect COVID to improve as quickly in California. How could anyone know? But theaters will open next month, and the theme parks will open next month as well. So they will go from losing money to making money. From a Comcast perspective, Disney has gotten a lot of credit deservedly for Disney Plus. Comcast still doesn't really talk that much about Peacock, yet Peacock has enjoyed great early success and should get a lot of attention once the Olympics come this summer.
Finally, on Disney, did we learn anything about them reinstating the dividend?
They haven't said when they will, but the reopening is a very positive step for both Disney, Comcast, and any of these companies affected by reopenings. This is a really positive move for all of the studios. I mean, the reopening of movie theaters and getting the movie business back on track, film and television production. Hollywood's been shut down. So, I mean, it's clear that balance sheets, well, Disney and Comcast have very strong balance sheets, but for the industry, I think they'll get a lot stronger over the next year or so.
Shepard Smith here. Thanks for watching CNBC on YouTube.